How's it going, guys? It's your boy Mike from Seattle with the Lumberjack Landlord, and we're going to be doing a reaction video this morning. In fact, we're going to be following up reacting to the exact same video that One Rental at a Time's Michael Zuber reacted to yesterday and is generating a bit of controversy this morning. So, a real estate YouTuber by the name of Real Estate Mindset made a video talking about Michael Zuber's real estate channel, the One Rental at a Time channel. In the video, he said that Michael Zuber and One Rentals at a Time's advice really isn't for beginners and that it's not for first-time home buyers. And at one point, he even called it crap.
Or whatever it is you're watching, One Rental. I've watched that crap, dude.
He kind of lumped in Zuber with Dave Ramsey and Graham Stephan, saying that they were wrong about certain things, like how the market's not going to crash. So what I've done is clip down his video into what I think are fair representations of his overall thesis of the video. 1 minute segments. And what I want Matt to do is just give his reaction to pretty much the exact same thing that Mike did yesterday. So Matt, are you ready?
I'm ready, and thankful I didn't watch Mike's yet.
Yeah, okay, good. So it's going to be a fresh reaction. We'll see if Matt's take is any different.
Housing prices increased throughout the first half of 2022 as inflation continues to affect nearly every sector of our economy. But the prices could soon crash, Torres warned. He predicted that within the next few years, house prices could drop up to, and another person's giving us 25%. So we have our second economist now saying a 25% drop, and they will begin to decline in early 2023. Did y'all hear that from anyone? Y'all watching any YouTubers that have said buying opportunities in 2023, possibly at the end of 2022? This article goes on, which could see double-digit drops in prices. Why I say, and this is to my man Jeff M. If you guys see Jeff M on my comment section, no, that's my dude, and I am worried for him because the slightest drop in interest rates, my dude was already out there putting in cash offers, and he knows better. He knows he's paying for an overpriced house, and he's still, my own boy, fear of missing out hit his soul. Jeff, stop watching. What is it, Rental One or whatever it is you're watching, One Rental. I've watched that crap, dude. Unless you're a savvy investor like them, stop watching that crap. Stop watching Dave Ramsey saying just buy. Stop doing that to yourself, brother.
Okay, that was the first clip. So what are your initial thoughts of Lumberjack Landlord?
So I don't think Mike's course is crap. I think what he does is I think he's developed a phenomenal process by which people can evaluate real estate and understand if something is or is not a good deal. So my perspective is that his course is not crap. I think that with how he does it, it makes it not just data, it's very informational with giving people the understanding and the approach to how to then evaluate the market. I think all markets are hyper local. I think every market in the country is different. I know that you guys are, seeing huge price adjustments in your market. We're just not seeing that in my market yet. We just haven't seen it. Our affordability index is negative. So we haven't seen that yet. With what was said in that Torres article, I agree with some of it. I think we are in for a correction. I still believe that housing is going to, that we will see double-digit declines in housing over the next few years. I think nationally, and I think some markets are going to lead that, and I think some are going to be the tail end of that, and I think in the different markets it's going to be worse. I think in the areas where you had heavy iBuyers or heavy institutional buying, I think those are the markets that are going to suffer the most. I think it's the Las Vegases, the Phoenixes, the Boise's, the parts of New York. I see that happening. I think the migration was very real to states that are low tax states. And I don't see a lot of those people coming back. And so I do agree that there's probably going to be a decline over the course of the next few years in the median house price nationally. I think there are markets that will decline. The one word I just really have the most contention with is crash. If something goes down in price over years of time, that's what was said in the article, years. Over the next few years, the market could drop as much as 25%. Well, nationally, the market didn't drop anything more than 8.9% in any one given year, firstly. Secondly is I do think that there is going to be that decline, but a large component of the previous crash back in 08, 9, and 10 and 11 was the debt structure. We don't have that same debt structure now. So I believe that we will see a correction. I believe that it will go double digit. I do believe that next year you're going to start to see, I think that next year prices will be declining. I think that this year we still end up with an up number because the velocity by which things are declining nationally just isn't there to nationally affect the number in a downward fashion. So I don't think Mike's course is crap. I think it's probably the best course out there when it comes to helping people identify an asset or a real estate investment that will give them the return that they should be getting on their money. But yeah, I think some of the other parts, absolutely. I think that the crash or my verbiage is correction, because I think it's, peak to bottom. I think it's less than 20% is what I see happening. So, yeah. And honestly, I don't know who real estate mindset. I don't know who he is. I've not seen him before. Not that I remember, but would love to know kind of where his view comes from. If you're an agent, yeah, this is Armageddon for you because you don't have any other skills. You're an agent. You're going to be out there trying to sell property that either A, is overpriced, B, doesn't exist, or C, you can't get somebody qualified for because of their DTI. So I think for real estate agents, I think that they have a really hard couple years in front of them for sure. I mean, it's not going to be like it was the last two, which is post it 13 offers and then just pick the one that's the highest over ask. It's going to be a different world for them. From an investor perspective, the argument is if it goes down, I shouldn't be investing.
Yeah, you're right. No, definitely
Shouldn't
not.
invest if it goes down? I mean, if my returns stay the same or improve, which largely they should, because rents aren't going down. So I think that it really comes down to perspective, and that's my perspective on that piece.
Yeah, and we'll get to his next clip in a minute, but just to follow up on that, yeah, I think, so the advice that he was giving to the commenter, and again, after watching his video a couple times and then seeing some of his comment responses to Zuber's video that he and I did, trying to get more of his perspective, it seems to me that he is suggesting that a first-time home buyer, that Michael Zuber's advice is maybe not good for the first-time home buyers. And in the comment section, he was saying like, well, if you're watching what Michael Zuber's putting out there and it's causing you to have, I don't know, some sort of heartburn or something over the market, stop. And what he said was stop watching that crap. And he did say that he probably shouldn't have used the term crap. Although I think at any point, if you call someone's content crap, they have a right to respond and defend themselves on YouTube.
Yeah,
so
I mean,
why don't we go ahead.
It's been called worse. Mine's been called worse, but that's fine. Like I just share my story of what I'm doing on a daily basis and how I get the returns that I do and how I manage my business, and how I buy property. So again, it really depends on perspective. And I think that, if his assertion is based on single family home buyers not following Mike's information, then I guess I understand that. But Mike doesn't market his course as a first-time home buyer program.
Right.
It's for real estate investors, and it's to understand what expenses are involved, what return on capital or yield you need to then get a return on the money that you're investing. You're not doing that on a single family home unless you're doing the lumberjack landlord 4-3-2-1 investment strategy where you're house hacking.
Right. Here, real quick, let's watch the next clip because it ties into exactly what we're talking about.
A perfect storm is brewing in the real estate market due to nearly decade-high construction levels and dwindling demand. Did you get that, Dave Ramsey? I'm sorry, y'all. I don't want to talk negatively. I don't want to talk negatively to anyone, but man, ever since I've made that video that I made about Dave Ramsey, I've seen other videos. YouTubers make videos like Rental One or One Rental, and then Stephen Graham or Graham Stephen, whatever. He also made a video, and the guy supported. Both of them supported Dave Ramsey. I'm like, did y'all forget about the first-time home buyers? Did y'all forget about the first-time home buyers and how difficult it is for the normal American to own their first home? All right. These are savvy institutional investors that are giving crappy, horrible advice to first-time home buyers. And that's my problem with the Ramsey. Okay. I know he's helped millions of people help themselves, and I get that. Props to him. But dude, like, you're a multi-hundred millionaire. Institutional investors, remember what it's like, if you can, to be a first-time homeowner, and advise them appropriately.
And keep going with what you were saying, but essentially, as he said, they're giving crappy advice to first-time homebuyers. Now, the point that I made when I chatted with Mike yesterday was, okay, not everyone who's a first-time homebuyer is looking to be a real estate investor. However, there is a bunch of overlap. I started my investing career with a house hack duplex because I was smart enough or lucky enough to think long. I knew what the end goal was. And I said, if I skip a house, if I sacrifice a little bit longer, and I'm still living in this duplex today, if I start with this, I will be able to qualify for better lending because I'll be able to get rental income on my tax reports.
Sure.
I'll be able to show that I have a trend and the ability to manage properties. And then you can always, as you even say, start with a 4-3-2-1 all the way down to 1. I just went from 2, and maybe I'll go to 1 one day. But go ahead and elaborate for us.
Yeah, I mean, I think at the end of the day, that's why the 4-3-2-1 strategy works, is that, you know, if you need to rush to get into a single family home, that's fine. But I would much rather see people trying to get into a multi 4 or 3 unit, where they're getting 80% of the rents counted towards their mortgage, where they're able to live for probably less than $1,000 a month in most markets in the States. And again, I understand where he's coming from if he's talking about single family buyers. But that's not what the course is about. The course is about real estate investing. And from an investment perspective, these things are true, which is you're investing your money into an asset and you need a yield on that capital. And the yield that you're getting is what makes you decide whether or not that's a good deal. What is the average price of yield? What is the average yield coming from those assets in that market? Then what's the return on your investment? And I think that when you look at 3-unit, 4-unit stuff, it's almost always in those scenarios, you're getting paid to live there. So I don't know what the angst is about the first-time home buyer, because that's not who it's being spoken to. And my elite abilities, I just helped a 25-year-old kid and buy a fourplex with $8,000 down. Like, 25 years old. He made $60,000 a year. He wasn't making crazy money. So he just did it. And so I think when you look at it, you have to really understand who your audience is, who you're talking to. And again, from a perspective of, well, what if rates go up? What if prices go down? Well, what if? If ifs and buts were candy and nuts, we'd all have a very Merry Christmas. But we don't. So what we have to really look at is understanding the market where we're at right now, what the return on that capital, that's the word, those are the words I use, return on capital, the rock. What's the rock in that deal? In one rental at a time, it's called yield. But from my perspective, I'm still buying deals now because the price largely is immaterial. Rents have not gone down since 1914. So if rents are even flat and stable, and I'm buying it with 30-year fixed rate debt, then I'm not really concerned about anything. I'm only concerned about, does it give me yield day one, or does it give me return on my capital day one? And if it does, those are the numbers that I care about. I would never buy a deal hoping for appreciation. I don't buy deals based on appreciation. I buy them based on what that cash flow is today, what my costs are to get into that deal, and then what the return on that capital is going to be for me. That's how I base a deal. So if you're a single family buyer buying your own personal residence, I don't think that Mike's channel is the one for you to watch, because he's not talking to single family buyers unless they're buying it for investment purposes. And from that perspective, I think that strategy works in a lot of markets. It doesn't particularly work in mine. I like the small multifamily 4, 3s, and 2s based on the type of debt structure that you can still get on them and what the down payment is. You can still buy a fourplex with 5% down if it passes the FHA sustainability metric. So that's my thought on that. So I think it's objection for the sake of objecting. Because I think I disagree with what Graham did, selling those 2 properties in LA. I disagree with that.
Yeah.
It's buying a single family house right now. Yeah. I mean, I wouldn't buy one, like somebody's buying one for cash. I don't buy one for cash unless I'm getting an amazing deal that I know I can then refinance into. I'm doing actually a deal like that right now.
Mhm.
So from that perspective, yeah, I wouldn't be buying cash for something and keeping that cash in there to make sure that I get some sort of return on that capital. That I'm not very interested in. Although, if you're getting decent returns, and you don't have a mortgage and you're putting, let's say, $250,000 in a house, you can maybe make 14%, 15% on that 250. You're not going to make that in anything else consistently with just having the asset just sit there, and then maintenance and such. So yeah, that's my thought on that piece of his objection.
So if we were going to talk to first-time home buyers, one of the points that Mike brought up, he asked the question. He was like, well, what does real estate mindset want you to do? Just sit on the sidelines and let your money get eaten away by inflation, even if you aren't looking to be an investor?
Sure.
What does he want you to do? And I brought up the point that, real estate mindset had talked about how Mike had done a reaction video to Dave Ramsey supporting Dave Ramsey. And I know it was the video that he and I did because the only way that Mike does a reaction video is if I do it for him. So I was like, it must have been the video that we made. And we made a video reacting to Dave Ramsey, explaining on his Ramsey show how back in the 1970s and in the 1980s, when interest rates spiked all the way up to 18%, home values did not go down.
Yeah.
And one of the thoughts that I had from that is we all know as interest rates go up and prices are going up, what's going to happen is it's going to get less affordable. Your monthly payment's going to go through the roof.
Sure.
So and maybe I'm wrong here, so I'll let you do it with much more investing experience than me. If I was going to advise someone who wasn't even looking at it from an investment perspective, but purely from an affordability perspective, today rates are lower, most likely, and prices are lower, almost certainly, than they're going to be in the future. So from an affordability perspective, now is the best time to buy for the cheapest monthly payment. And even if prices go down in the future, if those rates have gone up, which they most likely will to combat inflation, if those rates have gone up, that could overpower the falling prices. In fact, I think his thesis or one of his ideas is because rates are going up, prices may fall. But if I look at it from a purely affordability and a monthly payment perspective for a first-time home buyer, I want them, I don't really care too much the price they pay. What I want them to be able to do is have an affordable monthly payment, which is any combination of price and interest rates. And I don't see that getting better long-term. Go ahead.
Yeah, I mean, I think certainly. I think that really, A, depends on the market. B, no one thought that the rates were going to come down from 6.25 or 6.5, and now you can get in the 4s again, right? For a little and I believe that this is just a temporary stop.
Right.
And that's actually, I've talked to a lot of my brokers, and they said, yeah, it's pulled some people back off the sidelines, and they actually move forward, and they're going to buy something. So I think from that perspective, I don't advise on single family home buying because I'm looking at it from a business perspective and what return on capital that gives me. But if I'm in the market for a single family home, the gamble that you're taking is I would not buy it for cash is the first thing. I think that, but there's a lot of states where you go from like California to Texas. Guess what? You've got nothing but cash.
Right. Yeah. You got enough to buy something.
Yeah. So you're going to have to, you can buy something pretty big, and that's going to, obviously that's what's raising the prices a lot in Texas. But yeah, I think at the end of the day, for a single family home buyer, I still say go for the 4, go for the 3, 3-unit multifamily, and really put yourself on a road to financial freedom in 10 years. I think if I'm looking at it now trying to catch the falling knife and, well, based on what rates are and based on what payment is, the payment now this month is drastically better than it was even 60 days ago. It's still significantly higher than what the lows were when there were a bunch of people talking crash in all of 21 and the beginning of 22. They were proven to be wrong. They're still wrong. And I think that people lost out on homes that they could have purchased because they thought, oh, well, it's going to crash. It doesn't matter. What's your payment? So the only time that price matters is if you don't know whether or not you're going to be in that home anymore. Everything is worth more than what it was since the 08, 9, 10, 11 crash. Everything is worth significantly more now. Things go cyclically. If you know that you might need to move in 2 or 3 years, yeah, I don't know that that's the right thing. But I think one of the things that a lot of real estate agents don't understand is that, am I better off paying $2,000 a month towards my mortgage, or $2,300 or $2,400 a month towards my rent?
Mhm.
And then spending 2 years paying that rent, building no equity in the house, but more importantly, that rent isn't going to likely stay at $2,400 next year. It's probably going to be 25, 25.50, maybe 26, 27.50. So that will continue to go up. If you look at that over a 5 to 7 year span, in most times and periods in history, that's a significant rental increase over a 5 to 7 year period. If you're in a rent controlled state like California or something like that, your rent will likely have been raised anywhere from overall over a 5 to 7 year period. Your rent will likely have been raised between 15 and 20%. And now that's what you're paying monthly. If you have a mortgage that you're paying, it's not gone up 20%. It just hasn't. So I think that a lot of times what people leave out is, well, what's the alternative? That's where I think I take a holistic approach to things, which is, if I'm not buying and I'm not doing that property, what's my alternative and what's that actually cost me? And that's where I think there's a difference, because you're going to spend over the 5 year period, you're probably going to spend $40,000 or $50,000 more renting the same property, and you don't own anything, and you've got no principal pay down, and you don't have an asset.
No, I agree. I made the point when I chatted with Mike that I think it's extremely important to do whatever you can to get on the property ladder, because new opportunities open up for you once you get on the property ladder. Again, we don't buy with appreciation in mind. But when it happens, and it almost always will over a long enough period of time, it just opens up opportunities for you to do things like either home equity line of credit or cash out refinance, or trade that in for a bigger and better house if you're just someone who's not interested in investing. But even for the individual, so, if we're giving the advice that we're giving, which is, hey, you want to buy, you want to try to get it as affordable of a monthly payment as possible. Maybe if you're looking at moving in 2 to 3 years, yeah, I guess if there's a very specific set of circumstances for you where, okay, maybe you're going to move right away, and yeah, could you end up getting locked into it if there was a price crash? Well, at the end of the day, you still could always turn around and be like, okay, worst case scenario, even though you don't want to be a landlord, let's say that you buy today, values drop, you can't sell at a profit and get your equity back out, but you have to move for some reason. This crazy set of very specific circumstances, a worst case scenario, you could still say, all right, fine, I'll be a landlord, but only for a year or two. I'm going to rent it out so I don't lose the 25% equity that's being claimed is going to fall off. I'm going to rent it out until the market recovers. I mean, wouldn't that be a better solution than just losing all of the equity by selling at a loss? I think so. And to your point, since 1905, since rents have been being kept track of, they've never gone down. The entire graph, I watched Dion's video on it. I made a video on what rents do during a recession. 115 years worth of data. The worst that ever happened during the Great Recession was the growth slowed to almost zero, but it still was going up over time. So as your last effort, worst case scenario of, all right, I now have to move 2 years for a family emergency, the market's in shambles, at least I can turn around and rent it out, hold it for a couple more years and sell it when things have recovered. So I just don't see how even the advice that we give, I don't feel like it's not good for first-time home buyers. I don't know what advice we would have given them that would be to their detriment.
Yeah, I don't think that there is any advice that's any of this advice is to anyone's detriment. It's doing the work, daily discipline, understanding exactly what you're looking at every day. And I think that no one's buying a house nationally.
Right. Yeah.
Everything's
local.
People are buying in a local market. So you really need to, it's just like anything else. It's be educated about it. I think that newbies can absolutely get educated about it. I think that's what Mike's course is about. And I think that's what he does a really good job at. And I think that, you're going to need to come up with 7 or 8% to sell the house when you go. And if the market's already down 20, then yeah, you're looking at a major adjustment, and likely you're underwater in that mortgage. I completely understand the mathematics as I've laid out. I think the challenge is, to your point, you might have to pivot. And that's also, like I said, going into the idea that we're not making any plans to move here. We have our jobs here. We have our family here. We're not moving. This is where we're sticking. I think in that case, it's much less risky, because then if rates, as the price goes down and goes back up, again, you can't time the market, because if you're trying to time the market, you're never going to get it exactly right. That's luck. That's not skill. And more importantly is, what is your monthly expense renting as opposed to paying down a mortgage and getting into a deal that you might pay $100,000 less for, but the rate's that much higher. Your payment might be a little bit less, but you literally wasted 5 years on principal, on not getting principal pay down. That's my thought, kind of just and how I would look at that myself, and how I do look at that myself. But again, all of my advice isn't, and I think Mike's too, none of it is for the person purchasing their own home.
Yeah, the first time single family home buyer who has absolutely zero desire to ever be involved in real estate investing or anything. Yeah, the advice is not geared towards that person. So
100%.
Take it for what you will. Well, Matt, I think it's a good discussion. The YouTube comments are aflame right now. There's just stuff. Real Estate Mindset's promising a clapback video. He gave a little hashtag to Mike, and I can't remember what it was he said, but the implication was that Mike's just saying stuff for views. I have to freaking find it real quick, but let me see real quick what he said the hashtag
I think
was.
at the end of the day, if you're going to make that claim, you better know what you're talking about, which is more than watching a few videos. And I think that an hour long spent on a Saturday answering people's rental questions, I think the private Facebook group that he has for the people that are in his course, I think at the end of the day, what Mike does a really good job of is making data available based on a real estate investor's mindset. Mm-hmm. That's a real estate investment mindset. A realty or a real estate mindset, what exactly is that? Like, are you looking for just first-time home buyers? Are you looking for the move-up buyer? We can talk to you about the market, but we're looking at it differently as an investor, because we're looking at investing money to get a return on that money. Mm-hmm. That's very different than somebody buying a home to live in. It's just different.
Yep. I agree. Well, Matt, that's pretty much all I got for you on this topic. I'm sure it will be a continually evolving process. So maybe we'll see you next time on this one.
Much appreciated, Mike. Thanks for the time, my friend. Lumberjack Landlord, check us out, like us, subscribe us, and ask questions. I'm not afraid to bandy about.
All right, man. We'll see you later.
Thanks, Mike.